Time now for an in-depth look at the market action today. And for that, I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, thank you for joining us in our new time slot.
Thank you very much for having me.
Well, a major swing Monday on Wall Street, where stocks were up around 5%. The rise was a lot more subdued, though, elsewhere. What's the story in the global markets?
Yes. As you said, U.S. market has recovered quite significantly yesterday. Dow was up 5.09%, S&P was up 4.6%, NASDAQ was up 4.5%. If you look at from the peak to bottom of U.S. market correction, all these three indices were down by 16%. So this recovery was something that needed to come through. But still, it's not even halfway recovered yet. The reason for that recovery is because of the Fed willing to provide sufficient support in all means possible, including the rate cut possibilities, as well as the quantitative easing. Along with that, other central banks were talking about possible rate cuts and liquidity injection, including the ECB, as well as the Australian banks, central bank, as well as various other central banks, including Japan's. If you look at the Reserve Bank of Australia, they cut the interest rate by 0.25% to 0.5%, the record low level. We are expecting that the U.S. Fed will cut anywhere between 0.25% to 0.5% in March 18th of the FOMC meeting. With that, continuation liquidity is there, and therefore it will probably counter the concern about the coronavirus impact to the global economy. But however, though, most of the other markets in terms of the recovery in prices were quite timid because we're still uncertain about the phase and the speed of the spread of this disease.
Yeah, and that Fed meeting around 2 weeks away now, but following the rally on Wall Street, Korean stocks were also up a little bit. Mixed, though. Some other indexes, not the Kospi. The Kospi was up, the Kosdaq not so. But what's driving the trade here in Seoul?
Right. After the news of U.S. market recovering that much, Korean Kospi also did a very strong start. It started with almost 2% rise in prices for Kospi as well as the Kosdaq. However, though, very much throughout the day, it kind of declined. If you look at Kospi, it ended with only about 0.58% rise. As for the Kosdaq, it was actually down by 0.13%. Probably there may be two reasons for this. Number one is that the foreign investors will continue to be a net seller of this market, selling about 300 billion won worth of Kospi and also 220 billion won worth of Kosdaq. They are a slight buyer of the futures market, but overall, foreign investors continue to be the net seller of this market, putting pressure in the prices. In addition to that, if you look at the overall, the COVID-19 new patient rise, we were hoping that it will reduce down in the future, but as far as today is concerned, it added another 600 new patients. So speed of the rise continues to remain at 600 plus level, which puts some pressure and concern about the speed of the spread of the COVID-19 in Korea. Obviously, we need more aggressive measure from the government in order for the market to show very strong recovery. As you know, BOK did not cut interest rate last time.
Well, in the meantime, the OECD's lowered its growth forecast for Korea's GDP this year, now at 2%, which frankly some others might see as optimistic. But you mentioned government measures. They're pursuing some measures to keep the economy going. Is that the right move? And what kind of measures should they be?
Yes, I mean, I think that's something that must be done. I think that the Korean government is too focused on the property price rise at this point in time. If you look at the consumer debt level and the consumers' conditions, we do need other boosting measures, including the rate cut as well as the supplementary budget. If you look at the Bank of Korea, they were not really preemptively doing anything at this point. They were saying we should wait. But if you look at the level of the decline in terms of the service sector as well as the domestic consumer sectors, it's down by 50% plus just this month. We need more aggressive measure from the government on both sides of the fiscal and monetary policies. Hopefully, with the Fed lowering interest rate and most of the other economies lowering interest rate, we will see BOK following through. We do anticipate at least another 0.25% cut in interest rate, and also supplementary budget worth at least $15 billion US dollars, or 15 trillion won or so. Hopefully, this will have some bearing to the mom and pop shop that are suffering the most, the restaurants and various other service sectors. If that happens, we can achieve that 2% growth. At this point in time, without any policies, 2% has been very optimistic. I mean, last year was 2% growth. With this kind of decline, if we get 1% growth without any policies, that is a very good number. So we need the boosting measures to see that number to be achieved, 2% growth rate this year.
Got it. All right, Mr. Yu, thanks so much for coming on today and sharing your insights. We always appreciate it.
Thank you very much.